Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. InsideRealEstateRadio.com is the website. InsideRealEstateRadio.com is the website. Hey, if you want to give us a shout, 888-787-KLIF. 888-787-KLIF. Hey, time to do a little bit of mortgage talk. We're going to talk with Terri over at Supreme Lending Rockwall. Her website, TerriWaggoner.com, TerriWaggoner.com. How are you?
Good morning. I'm good. How about you?
I'm good.
Happy New Year.
Happy New Year.
Have we had enough of that yet?
Not yet.
I have.
When do we have to stop saying it?
I don't know. I'm ready.
I think as long as the first month, really.
Yeah. Yeah, you're probably good.
Because you're going to see most everybody in the first month.
Right. Well, yeah.
And if you don't, well, then...
You didn't need to see them anyway.
Yeah.
No, I'm just kidding.
they don't get a Happy New Year.
That's right.
What's going on in the mortgage world these days?
Oh, gosh, a lot. But I thought I'd talk this morning about just credit scores, credit scoring formulas, so we can kind of start out at the basics.
Okay.
First of the year, let's kind of start over. And we'll just take it right down to the bottom. Okay, everybody knows or should know your credit report. There are 3 credit reporting agencies. You've got Experian, Equifax, and TransUnion. Each of them have scoring models, their formula that puts together what your credit score is. They probably vary a little bit from bureau to bureau. That's why you've got a different score for the same information on all 3 credit bureaus in some instances.
Right.
So the breakdown as to what goes into your credit score is your payment history takes up about 35% of what your actual credit score is. Then your amount owed is going to take up about 30% of your credit score. So I thought we'd go over those 2. Then there are some other components. You've got your length of credit history is going to be about 15%, new credit about 10%, and types of credit used is about 10%. So let's talk about credit history first, because it's the biggest component of what is going to go into your score.
Okay.
So just because you might have a few late payments on your credit score doesn't mean that's a score killer. You're not dead in the woods. You can't buy a house. You can't buy a car. You can't do anything. But you certainly want to watch that. You don't want to be late on your payments.
Right.
But then on the other side of that coin, just because you pay all of your credit cards perfectly, all of your accounts perfectly, doesn't mean you're going to have a perfect score. So.
What's considered late?
Good point, Richard. Late is, and it may differ from different creditors because their due dates and when they report to the credit bureau. But typically, anytime you're 30 days past due on a payment, that's when it's going to show up on your credit report as delinquent.
Okay, so if I'm paying everything 2 weeks late, is that considered late, or is that considered like a slow pay?
It is considered late at that particular lender.
Okay.
With that creditor, your payment is late. Because
Okay.
if it's due on the 1st, they want to see your payment on the 1st or before. And by the way, it's okay to pay early. But yes, it is late. It's not going to show up on your credit report, however.
Okay.
But that particular creditor is not going to be happy with you. They're not going to extend you. Let's say it's a credit card and you pay it 2 weeks late every single month. You're never going to get your credit limit raised. As a matter of fact, they may lower your credit limit.
Yeah.
And that can hurt you pretty bad too.
And they'll take you to the max interest rate.
Right. So you want to watch all of those things. But even though you're making your payments every month on the day that they're due, doesn't mean you're going to have a perfect score. Because if you have, let's just take, for instance, a revolving credit card. You have $1,000 credit balance. You keep that bad boy charged up to $999 every month. And then you pay the minimum payment's $35 a month. You're paying it on time, but you're only paying $35. And then you charge that $35 back up the next month. Okay.
Yeah, buddy.
That's not going to create you a good credit score.
It just freed me up $35.
That's right. I'm going partying.
I don't got money, but I got checks.
You can't do that. Yeah.
I paid $35, but you only gave me $5 worth of additional credit.
That is correct. Yes. So you want to watch all of those things. So you want to make your payment, but you also want to watch the utilization of your available credit. Okay? Because a lot of times when we pull credit and someone's credit scores, they have no late payments. They have no collections. They have no charge-offs. Everything's good. They're paying their accounts on time, but everything's charged to the max. You're not going to have a high credit score.
Right.
Okay? So pay attention to that. The different types of credit accounts, payment history that it's going to take into account. You've got your credit cards. You've got like your store credit cards, your gas cards, things like that. You've got installment loans. Installment loans do not hold as much weight as your revolving credit does. So but let's say you go out and buy a new car. That's an installment loan. Right after you get that loan, your credit score could and probably will drop a few points because now you've got more credit that you're utilizing. But that installment loan, as you pay it down, is not going to improve your credit score as much as a credit card that you're paying down will improve your credit score.
Right.
Okay, so the different types of accounts can make a difference as well.
Yeah, and it's important for people to understand that, look, the credit scoring system, it's not a fair system. It's a system set up there's no, I'd like to say there's a playbook to it, but at the end of the day, there really isn't.
No.
So, you really need to listen to what Terry's talking about because this is good advice, good, helpful information because, look, it's just not some system that's set up and there's a rule book and, you play by the rule book and it works out. No, not really. It's just, it's really random.
It is very random and it's very frustrating in what I do because you'll pull credit on two folks and you've got one that there's no reason that his credit score is as high as it is, and then you pull someone else's and there's really no reason why his credit score is as low as it is.
Right.
He's paid all of his counts, but it takes more than what we're seeing into account when they put together that credit score.
Right.
The length of time that person has had credit will play into it as well. So, and what other, I'd just like for everyone to kind of pay attention to their credit this year. Check it yourself, call me, have me check it, but don't ever pay one of those websites that you hear on TV or anywhere else to give you a credit score. Because Credit Karma and the credit cards that you have that offer you the free credit score, those are good indicators as to what we can find when we actually pull what we call a tri-merge credit report. But it is not, that's not accurate.
Right. So
please don't pay for Credit Karma credit score or any of those. Or one website that I always send folks to once a year is annualcreditreport.com. You should check your own credit every year, once a year, just to see what's on there. One time I had a customer that he had perfect credit, but his credit score wasn't where it needed to be. Believe it or not, he had a $2 collection account on his credit. $2.
Mm-hmm.
And it kind of ruined him. Now, we were still able to do the loan, but your credit score dictates what interest rate you get on a mortgage loan.
Yeah.
It dictates what interest rate you get on a car payment and other things you may be shopping for. So I want everyone to just kind of realize how important your credit report and your credit score are and kind of take care of it. It's important for you to take care of. So pull your credit report yourself every year. Check what's on there. If something's not right, you can dispute it. And we've talked about this before as well, Mike. But disputes sometimes aren't always the best thing for your credit.
Right.
When you dispute an account that's on your credit report, what it does is it takes that account out of the scoring formula. Okay, so that account doesn't count right now. But then they're going to send a notice to that creditor and says, hey, Terri says this isn't hers. What do you say? Verify the information. All they have to do is, yeah, this is hers. Send it back in.
Right.
They don't have to prove that I had that collection account. And then that goes back on in your scoring model. So, but what that does when you purchase a home on some loan types, that disputed account is going to have to be removed anyway. Mm-hmm. So it's not a bad thing to dispute incorrect information, but don't go on there assuming you're going to dispute correct information and it's going to go away.
Right.
Take care of your business. Pay the folks that you owe. Mm-hmm. I know that everybody comes into some credit issues sometimes and you know, your money crunch and you can't pay and you just spent a bunch of money on Christmas. But now is a great time for you to pull that annualcreditreport.com to see what's on there and what you can do to fix it.
Yeah, absolutely. You know, and at the end of the day, you know, you need to, you know, new year, new you, think
right.
about, you know, you need to know your credit score and also think about, keep in mind that, you know, maybe try not to open so many different lines of credit, because once you start opening credit, I mean, you need a little bit of credit to establish yourself.
Yes, you do.
You know, you have to have it. You just, to be in the game, to, you know, get the interest rates for a home, for a car, et cetera, you need a credit line, you need a baseline. But, you know, if you're still young in life, maybe think about not opening up so many lines of credit, because ultimately, if you start with a lot, you're going to keep going that way. You're going to keep opening new lines of credit, and it's just going to totally put your credit scores out of whack long term.
Right. Everyone probably needs maybe 2 credit cards, but don't assume that you don't need any credit cards, because you do.
Right.
Because that can definitely hurt your scores. I've looked at enough credit reports to know that if all you have is a car payment, your credit score is probably not going to be very high.
Yeah, and don't
even
just,
if you make it on time every month.
Yeah, and don't just open, you know, an account with, you know, the first one that sends you something in the mail.
Right.
So you really need to look at it, pay attention to it, because then here's the thing: once you open an account, then closing it, just because you close it, oh well, I closed that account. Well, closing something
can hurt you.
Can hurt your credit score. So,
right.
So there you go. So hey, pay attention to Terri. Get with Terri. Her website's terriwaggoner.com, and she will get you taken care of. And of course, hey, if you're thinking about refinancing, cashing out, purchasing this year, you want to get with Terri at least 6 months in advance to get you taken care of. Hey, folks, we're going to take a short break. We're going to come on back with our high school sports segment. Hey, we've got a special guest. We've got head coach Randy Allen, state champion from Highland Park, head coach. He's going to be on the line with us. Come on back. We'll see you in a few.